Okay, so a lot of you traders out there may not know this, but you can actually grow a $500 Microfutures account, all right? Talking about your brokerage account, by simply following a set of very easy rules, okay? I've talked about this before in videos, but I want to kind of fine tune it and touch on it again for anyone that may be watching this for the first time that didn't see the old video or older video. I like to classify this as what's called the 5% rule, meaning you're not leveraging or risking more than 5% of your account at any given time. Yes, with $500, I know that is a very, let's say, not, it's very limited, a very small amount of money, okay? But you can definitely grow it. Now, you're not going to get rich overnight, and you're not going to turn $500 into $10,000 in 30 days, but you can definitely compound that account to where you can grow it to start making thousands of dollars month to month by simply following this simple 5% rule, only using $500. And you don't have to have any experience in doing this, okay? Because I'm going to show you today a very simple process of how I go about looking for opportunities here on my charts. Always starting with a higher range chart, my higher base range charts. Yes, you heard it. I do not trade time, tick, or volume charts. I trade range charts, okay? Why do I do that? Because to me, they are cleaner. They're easier for me to be able to see the momentum and be able to see volume in the market. The candlesticks, I don't have to worry about big wicks, small wicks, I don't have to worry about all that clutter of things that are going to really mess with my mind or my eyes when I'm trying to see what's going on the charts. I want to see clean setups. I want to see easy movement within the market where I can, gauge what's going on at simple areas and how I trade supply and demand. Simple strategy. I always start off by finding zones of my higher base range chart, and then I'm looking for opportunities where I scale down to once the market taps into that higher range chart zone to where I can scalp off of my lower range chart. So I'm using a 120 and a 24 range chart on trading in the NASDAQ. All right, that is the MNQ. Now, if you're someone that's trading like the MES, which is the micro version of the E-mini S&P 500, you can do just the same, all right? Most brokers, the E-mini S&P 500, the micro version of it is going to be cheaper per tick when it comes to the, I should say the actual margin size is going to be lower, okay, than the actual NASDAQ, the MNQ, but still, the Microfutures is it's probably the best, and I'm going to say it is the best way to really get your feet wet, to really get some skin in the game. But you don't have to put a lot of money on the line either, all right? You're not going to have to be worrying about, big, if the market, kind of pulls back on you several points and you've got one contract or two contracts on, like in the E-minis, you can take a heavy hit and it may be hard to turn things back around if you have a lower size account. So what am I talking about in reference to the 5% rule? And we'll look at some examples of, how I go about trading just as well. So let's say you have a $500 brokerage account, okay? All right. So you put that amount of money that you saved, all right? And I'm going to say this now. Please do not be using money that you do not have or you cannot, how should I say this? That you cannot afford to lose, basically, okay? $500, yes, it's not a lot of money, but some of you may that are, just starting off, $500 may be, money that you need to pay your mortgage with, or your rent with, or take care of the family with, or use some of that to pay your car note. Please don't do that, guys. Really save up money, put it away into an account to when you are ready to start trading, you can use it. Now, $500, we're talking about 5% of that. That is only what, $25, right? Yeah, it's not a lot of money, okay? It's really not a lot of money. But 5% of that 500 is going to be 25, so that's going to be the amount that you're only going to be looking to risk per trade. That's it. So think in your mind, risking $25 to possibly make $50 or more doesn't seem like a lot, but it compounds over time, week to week. So don't be looking to take $500 and think that you're going to make a lot of money trading futures very quickly. But if you give yourself a good, I'd say 90 days, you're going to see where you're going to be able to put away a couple $1,000s, and that account size is really going to start to grow to where you can start to increase the size of the amount that you can actually trade. So what does that mean? So let's say if you have $4,000 in your account, you started with $500 and now you have $4,000. Well, Think about that. Well, that means that on 5% of $4,000, now you can risk up to $200, and now you can try to make in profit $200 on a 1-to-1, or maybe having a 1-to-2 where you're risking $200 to make $400. You see what I'm saying? So you can give yourself that couple month time frame, and you'll see. I'm going to show you some quick numbers right quick. Just for example here, let me use the calculator, bring it over to the screen right here. Let's say we have $500, right? And we're talking about only risking and leveraging 5% of that. That's $25. That means that we're going to put a stop in place of $25, and what that equates to in reference to is about 12.5 points on the NASDAQ futures, okay? All right, I'm talking about the NASDAQ, the E-mini micro version of the micro E-mini version of that, all right? Now, if you're someone that's looking to, say, for example, 1-to-1 you're going to be looking to make $25, risk 25 to make 25, or go for a 1-to-2, which is basically you're looking to make $50, okay, and risking 25. So that's a 1-to-2 risk to reward, which means that, again, you're only risking $25, which is 12.5 points to make about 25 points. Can you do that trade the NASDAQ? Yes, you can. So if you are able to, say, for example, making profit, just think about this. $50 on a day, and that's not a lot, okay? You can definitely do that. Times 5 days a week, that's $250, right? You do that times 4, and that's $1,000, okay? That's $1,000 that you've made in just 1 month's time, to where now you have doubled up in size, where you started with $500, and now you're at $1,000. So you made $1,000 the first month. You put in $500, and started with that amount. Now you have $1,500. So month 2, if you look at the numbers, okay, so that's $1,500 times 5%, which means I can risk up to what, $75, right? So now that I can risk up to, let's do that again. So that's $1,500 times 5% is $75. That's the amount you can risk or leverage, meaning basically you're going to put your stop at a max to try to make at least a 1-to-1 of $75 in profit, or maybe make a 1-to-2 to where you're going for $150. So let's say you're going for $150, right? And you're risking $75, and now you have a account size of what, $1,500 times 5 days a week. That's $750 that you can make per week times 4. All right, so month 2, now you rolled over $1,500 into month 2, and now you've been a profit, let's say $3,000. So now you have a total of about $4,500 in your account moving into what, month 3. And it starts to compound as month to month roll on, and just using this simple rule. 5% using the micro futures is a very systematic way of compounding and building up an account to grow your brokerage account, simply put, okay? So let's take a look at what I mean when it comes to trading, like, a very easy strategy that I use and I talk a lot about here on the channel. And I really go into detail about it for the private community that is built for those who are either the elite or ultra elite supporters of, this channel here. And if you're interested in doing so, to where you receive tons of valuable information that can really help you in your trading and can possibly even help you become profitable. The reason why I say, possibly is because the fact is that not everyone may see the same thing the same way that someone else may sees it. I'm going to tell you the reason what I'm talking about when I say that. Understanding structure and price action. Most people, they struggle with that concept, and that's probably one of the number one reasons why they end up failing in trading. And then second to that is going to be their own psychology. So I'm not here to say that I can guarantee anything, but I'm here to show you a strategy that works, that I trade day in and day out, as well as lots of other people that are part of the Discord community, which is free if you want to join. The link is down in the description. They trade it just as well and are making money doing so, okay? Testimonial after testimonial people are posting on the testimonial section of our Discord channel. People are profiting using this same strategy. So, but they're finding lots of value in becoming either an elite or an ultra elite supporter. Now you may be thinking, well, what's the price tag involved in doing so? It's very inexpensive. All you have to do is scroll down to the description portion of the video. You'll see a link there titled Ultra Elite Supporter. Once you click on that, give it a couple seconds, and 3 tiers will pop up. You either want to choose the elite or the ultra elite tier. What do you receive with the elite tier? All my trade breakdown videos where I go through setup after setup after setup, breaking things down in reference to trades I've taken and posted over on the Discord, and talking about stop loss placement, profit targets. The biggest thing, market structure. The biggest thing also, why did I take that trade, so that you can grasp an understanding of what to look for when trading the actual strategy. You also receive the video playlist, which is a series of videos that I believe are the most important videos to watch that are part of the channel videos on the channel. Okay. Also, you receive the market structure video for anyone struggling with that concept. Now, if you want to become an ultra elite, you get everything I just mentioned plus my live recorded trading sessions and the market recap video. But let's talk about the strategy right quick, what to actually look for so that you can use this 5% rule for anyone out there that may, be limited with funds of only $500, maybe $1,000 and just starting off. But please, please do not jump into the E-minis straight on. Trade the micro E-mini futures. It is your gateway to becoming profitable. All right. So all you really got to do is just really pay attention to structure. Okay. I'm gonna be honest with you. And again, it's like I said, I'm using range-based charts. So I like to be able to look at the market. Now, in reference to structure. Okay. So all you need to do is just simply understand this right here. Is the market making higher highs and higher lows? Or is it making lower lows and lower highs? At this point right here, we were making higher highs and higher lows, so I would only be looking for opportunities to go long. Now, the last few days at the beginning part of this week here, we started transitioning from this last high the market came off of, where we made a low, broke below this area structure right here, made a low, so we made a new low, a lower high, and a lower low right here, okay? So this is a breaker structure as well after the market shifted and basically had a reversal in direction from bullish to bearish. Now we got a new low here. There is a low probability supply zone here, but what I'm trying to get you to see is that the channel started to the downside right here from this last high that it made to where it made this new low. Low, lower high, lower low, lower high, lower low, breaking structure lower. So as long as the market is breaking lower, okay, and we got a reversal taking place right here, I'm only looking for key pullbacks to areas of supply, all right? Now, if you notice right here, let me show you. The market made a low, lower high, and a new low, and this is a beautiful area of supply. What makes the difference, I always talk about when it comes to low versus high probability zones, is if there's a imbalance or gap resting back at the actual zone, okay? This is a high probability supply zone right here, okay? And I talk about this a lot over on the elite side or the ultra elite supporter group, that private community. Again, if you want to join, the link is down in the description. Because that's very important. The imbalance of gaps resting back at a zone is really what's going to make the difference of you getting into successful or not successful trades, okay? Now, this one didn't hold up, and the reason why you always got to think like this logically is that if the market is moving to the downside, right, and then it makes a low and a lower high and another low, but never comes back and fills these gaps right here, and then we gap down and make a lower high here and another low here, and then we got gaps right here back up to the supply zone. You got to think, if we come back up here, they may not want to stop right there. They could react and reject here. I'm not saying not to take a trade, but not off the higher base chart. Definitely look at it from a lower base chart to get yourself into a trade. But they could want to fill these areas here, and that's what happened here. They stopped here, bounced a little bit or reacted, and then they wanted to come fill these imbalances right here back up to the upside, because that's the way the market moves. It's got to fill in all the imbalances at some point. Once if it gets too far away from its basis. The basis of the transition where the market shifted was right here, and it made gaps coming on this breaker structure coming to the downside, swinging lower, another low, lower high coming down, more gaps, came back up, filled here, and they wanted to fill this here. When they finally came to this area here, the supply zone here, this is what was a setup for a good recipe for a nice setup to actually go short. I'm going to show you why, because once it reaches this zone here and fills these gaps here and here back to the upside, guess what happens? And there's nothing really to be filled. Well, there is right back up in here, but they reacted right here because this is a strong area of supply and also a good area of support just as well. Resistance as well. So once we tap into that zone, we'll move down to like the 24 range chart. That's my entry chart. I'm going to show you right quick. Let's go to that area. I believe that zone there was established, or that was towards the end of July the 15th, which was 2 days ago. That was Tuesday. Let's go to that zone right quick. I'm going to show you a few opportunities in which you could have traded going short. Now, market taps the zone, right? That larger box there, that's the 120 range zone there. There was actually what I like to classify as a zone within a zone. I talked about this yesterday right here, okay? That you could take the trade from. What does that mean? where I'm looking for multiple chart confluence, a higher base 120 range zone and a 24 range lower base entry chart supply setup to go short. Okay, there was one right there which you could have taken short, but this was right at 830, which was news, and I wouldn't have taken that there. But had it not been news, then that would have been a great opportunity. But let's let news pass, and then we look at what took place. Tapping off of the higher base 120 supply zone there. Okay, the market does what? We're looking for bearish movement to the downside because we're bearish on the higher base chart. And I always say, take your trades in the direction of what's going on your higher base charts. And on your lower base chart, so if we are moving to the upside, okay, on a lower base, on a 24 range chart, whatever your lower base chart may be, but we're bearish overall on your higher base charts, trade in the direction on your lower base chart in reference to or in the direction of your higher base chart. So I would look for on my lower base chart, even though we look, kind of bullish back to the upside on this channel going higher with bullish momentum, I would wait for I start to see breaks of structure, broke this low here, made a new low, pull back, made another low, breaking more structure below here, look for a pullback to this key area of supply right there. Or another one, new lower high, new low right here, breaking below this area structure, another area to actually go short to take back in this area of supply. Both of these are high probability supply zones. Okay, now if you take this trade here, take a look here. If you get into this first one trade more aggressively, you're going to get in here about 23,044. Take it down to the lows right here. That's 23,017. That one setup alone would provide you enough points to definitely where you're making over that amount that I talked about with starting off with $500 and you're looking to trade and pick up maybe $50 a day. You'll definitely pick that up because that's a good. What is that? That's 44 and that's 17. That's 27 points right there. So if you do that times four, because there's 4 ticks in every point, we'll just do the math right quick. Times 4, that's going to be 108 ticks times 0.5 because each tick is worth 50 cents on the micro NASDAQ. Okay, micro NASDAQ there. That's going to give you $54 right there. So yeah, you met your daily quota, right, or your daily goal. You do that each and every day, and then right behind, like I said, there was another setup right here where it came up. Let's say you got into this trade here right at 23,039, looking for the lows to be taken out there at 23,012. Again, another setup back to back. You can pick up well over $100 on very easy on both these two setups here, which were back to back. These two setups were basically happened within basically 4 or 5 minutes of each other, and you're done for that day. So if you could do that just by picking up one trade a day and making $50 a day, starting off with that $500, you're gonna guess what? So basically, you're making 10% on a day, which you started off, investing or putting into your brokerage account. $500, 10% of that is $50. So you're making a little bit more than 10% a day by doing that. Trying to pick up $50 a day, we're risking only $25 a day. You can definitely do this. Again, at the end of the first month, if you do that, then when you start with $500, you picked up $1,000, and now you rolled over and start up the next month fresh with $1,500. And you do that the second month. Now again, you can increase the size of your say your stop or your risk amount that you're looking to leverage, because now you're risking. I'm not risking, but you are using a little bit higher amounts of money versus $500. Now that's 3 times the amount, $1,500. And what is that again? $1,500. 5% of that. There we go. I'm gonna show you the math. $75. So we risk $75, and you could try to make what, $150. You could definitely do this using the 5% rule, just looking for these type of setups. But again, trading in the direction of the higher base chart, like right here, we are bearish to the downside right here. Okay, pull back, nice area supply, and then follow up with that on your lower base chart. Switch down and move down to a lower time frame chart or lower range chart or lower base chart to look for an opportunity to where the market starts to break structure lower, pulling back to a key area supply. We're tapping off a higher range chart supply zone, so then look for a lower range chart or whatever you're using. Maybe you're using time charts, or tick, or volume charts. Look for your lower base chart to start setting up to where you have nice areas of supply forming with breaks or structures as the market is moving away from this key area of high probability supply off the higher range chart. So hopefully that makes sense. But again, this video is really more so about growing and building that brokerage account simply by starting off with $500. This is for those out there who don't have much experience, but you really need one concept to really get this under wraps, and that is understanding structure of the market. Okay, that's all I have for you guys today. Again, if you're interested in becoming an elite or an ultra elite supporter, the link is down below. Or even if you want to join the Discord, it's free. The link is down below in the description portion of the video. If you have not taken the time to go ahead and subscribe to the channel, do so right now. Hit that sub button. Make sure to turn your post notifications on by clicking the bell. Share the video content by clicking the share button within this video that you're watching right now. And do me the biggest favor. Drop a like if you found some value within this video, or if you said, hey, I'm going to give that 5% rule a chance. If you're going to do so, leave a comment down below. All right, let me know if this made sense to you. Simply just using 5% or risking no more than 5% of your actual account size. Do it. I'm telling you, we have people that are passing their valuation or challenges. Some of them trade prop firms, and then nothing wrong with trading your own money if you know how to. But I think, and I'm gonna say this because I didn't. When I first started trading, prop firms weren't there. Okay, now today there are companies out there that allow you to test your skills to see how well you actually can actually trade. And I think they are a good training tool for a lot of individuals, and to make some money, and try to withdraw, from your funded accounts once you pass those evaluations. But it's a great tool to really test your skill set to see how well you are as a trader. Okay, if nothing more. I mean, dropping what, 30, 40, 50 bucks on a challenge, if you can pass it, it's a lot easier. I hear from a lot of people to do that than risking, it could be a certain amount of money that you could actually lose. Let's say I dropped $50 on a challenge, but if I trade my own money and I lose, then I may have lost $500 or $250. But if I trade and put in $50 to try to pass the challenge, I only lost $50. I understand that, that psychology behind that, but the thing about it is to really learn a skill set so you can pass the evaluations, not get caught up in the cycle to where it's a repetitive cycle to where you're $50 here, $50 there. You keep coming back to that table, dropping those small amounts of money, and then they add up they add up over time when you start looking back how much money you've blown in evaluations. So really work hard at trying to pass them, and really work hard on trying to keep the funded account so you can withdraw funds. And once you do so, please set yourself up and start depositing funds into your own personal brokerage account. Hopefully that little information there helps out. All right, guys, that's all I have. Take care. I'll see everyone in the next video.